Alrighty, I know I'm just waiting for a couple more people to join in, but I just wanted to get started, be conscious of your time. Today, we're going to be talking about options for your investment property clients, and whether you're an investor yourself or you're a realtor and you want to be able to provide options for your clients. I just love talking about investments just because I'm an investor myself, and we just have so many options here at CoLab Lending. So the first question that we often get is, I'd like to buy an investment property. Should I buy it in my personal name? Should I buy it in an entity? What are the pros? What are the cons? Does it matter? What's the difference? So we're going to be going into all of that today. And then there will be an opportunity to answer any questions at the end. You can always just drop a question in the chat box. And like I said, we'll touch on that a little bit later. So first, starting out, buying a property in a personal name, I find that most investors start with this, whether it's just because they don't have an entity set up, or they maybe have a house that they currently live in and they're going to be buying a new primary home and they'd like to turn their old primary home into an investment property. So just something to keep in mind. Fannie Mae and Freddie Mac, who they're the ones ultimately, the entities ultimately, giving us the approval to do these loans, they have a regulation that you can only have up to 10 properties in a personal name at a time. So that's for each individual. And what we're seeing, and we're obviously in a little bit of a volatile market right now, is that Fannie and Freddie are not even necessarily allowing us to go up to 10. Just with the approvals, and it's one of those things where we have to run it through a system. But I had a borrower a couple weeks ago where they had 8 properties in their name and we could not get an approved. So it's one of those things where if you're really starting to accumulate properties, we may look at buying in an entity name just because we're going to end up hitting that wall. There are some benefits of buying in a personal name. So it's one of those things where we'll go into some of that a little bit later, but it's just something to keep in mind as far as, how many should you have in your name. When you're buying in a personal name, the borrower is going to qualify based on a debt to income ratio. So very similar to when you're buying a primary home. We look at the monthly debt obligations, not necessarily the balances, but the actual monthly payment that's required. We look at the new mortgage payment, and then we look at what is their income coming in. We can use rental income as part of this calculation. Just keep in mind, though, there has to be a history of it. And if you are not claiming that money on your tax returns, we likely cannot use it because, the government wants to get their fair share and they expect you to pay taxes. And so if you are a landlord and maybe you have an investment property already and your tenant is only paying you in cash and you're not putting that anywhere on a tax return, we're not going to be able to count it. It's just like cash. And again, we can't do cash at all in any kind of loan transaction. So keep that in mind when it comes to the debt to income ratio. We also have to take into consideration vacancy rates because the lender, the underwriter, they're going to say, hey, are you really going to have this property occupied 100% of the year? Most of the time, the case is not going to be that way. So they have to account for that just in case. Are you still going to be able to pay the mortgage payment if, for example, your tenant leaves or if there is a vacancy? A benefit of buying in a personal name is that the interest rates tend to be slightly lower. The rates are going to be higher than, say, a primary residence, right? But they are going to be slightly lower than a commercial loan. Now, I say slightly. Sometimes we're talking 0.5% or even maybe up to 1%. So rates are one of those things that consumers are taught rates to focus on because they're not really taught anything else. And I always say, really, what is the bigger picture here? What's going on with the property? What are your long-term goals as an investor? And does this rate make sense for the property? But again, just something to consider as far as a benefit. Another benefit is there's no prepayment penalties usually. And that's always a great thing to have, just because if there's an opportunity maybe to refinance, I know the rates are a little bit higher right now, but maybe in a year or two they will drop. We can always refinance and you won't have to pay a prepayment penalty. So definitely a great benefit there. Whereas on the commercial side, we'll talk about that a little bit later. When you're buying in a personal name, you can do any loan amounts. This is great for when you as an investor or your borrower as an investor finds a really great deal, right? You find that $70 or $80,000 property, and you want to buy it, and you're going to be putting, your down payment down, and now the loan amount's a little bit lower than say 100,000. The lenders are not going to really care about that too much. You might get a hit on the interest rate, as far as they may have a higher interest rate if it's under a certain threshold, but we can still do the loan. And we have done loans that are on the lower side. So great options regarding buying in a personal name. So next, let's switch really to the commercial side of the business, using an entity to purchase an investment property, like an LLC. And I'm going to reference LLC in this webinar, but you don't have to buy an LLC. You can buy in a different type of entity. And I'm going to defer, those questions to either your accountant or a real estate attorney, because they can really help guide you on what makes the most sense as far as setting up the entity and which way to go. Things though that I just like to talk about with regards to an entity is that we're going to need the entity paperwork. We're going to need an operating agreement. And those things can be put together very quickly. I've had borrowers that have created an entity while going through the loan process. So it's not that complicated, and it's not that expensive to set it up, and it's a pretty short time. So just keep that in mind if you don't already have an entity set up. But great things about buying an entity. So you can buy as many properties as you would like. I've had borrowers where, they have 100 properties in the same LLC. So there's really no limit on that piece. I've also had borrowers where they buy only, a few properties in each LLC. Does not matter to me how you want to set it up. Just know that those are options. When we're doing a commercial loan, it's important to know all the parties that are involved in an entity. So, I will ask that question. If you're not sure, you're going to have to either get out your operating agreement or maybe check out your tax returns, because it will break it down of how much ownership do you have. I need to know how many people are going to be a part of the entity, because that can affect the loan. Even if you have a silent partner that maybe only owns 10% or 5%, that person may be required to be on the loan depending on the lender. So just something to consider when you're looking at a commercial loan. If you are not getting along with your business partner, they don't want to buy a property, that could be an issue. What I love about commercial loans is that we base the loan off of the cash flow of the property. So we're not looking at that debt to income ratio. Those don't even come into play. So just truly, does the market rent cover the mortgage payment? And really, I'll give you some easy numbers to work with, but say the mortgage payment is going to be $1,000. Is the market rent going to be $1,000 or more? And if it is, then the lender's likely going to be able to do it. If it's not, we probably won't be able to do it. Doesn't mean it's definitely a done deal. We just have to take a look at, there are some lenders that have exceptions that we just have to take a look at who will be willing to do it. Maybe you have an excellent credit profile, and maybe in year 2 that rent is going to go up. We could take a look. One other thing to keep in mind is we'll do the market rent. That'll be a part of the appraisal process. So it won't necessarily be what the current landlord is charging. Maybe they have a tenant that is grandfathered in, right? And they're only paying $850, but the market rent in your area is about $1,100 or $1,200. That will still be fine, because again, the lender expects you to either increase the rent for that tenant, or maybe that tenant's lease is coming up, and maybe they're not going to be staying. So just, again, keep that in mind when we're looking at the cash flow of the property. Interest rates tend to be slightly higher. And I know we talked a little bit about in a personal name where they're slightly lower. So they are slightly higher, right? It all comes down to risk when it comes to buying a commercial property. Because ultimately the lender is going to say, okay, if you've got a personal mortgage and you've got a rental property and you're only able to pay one mortgage payment, which one are you likely going to pay? The answer is your primary home, right? Because that's where you physically live. You may not be willing to pay the second mortgage if you fall on hard times, or you can't get a tenant to pay. So it's one of those things where, again, they just need to make sure they're going to be able to get the mortgage payment paid. Credit always does factor into that rate. So sometimes people will ask, well, what's the interest rate? I'll give you a general range, but every borrower is going to be a different situation depending on what the credit looks like. And that is a factor. Even though the entity is buying the property and we're doing the loan in the entity's name, the borrower is still a personal guarantor, meaning that we're still going to use their credit. They're still responsible for making the mortgage payment. And then one more thing just to keep in mind for commercial loans is that there is a minimum loan amount of 100,000. We're adding new lenders every week to our list of who we're working with, but it seems to be across the board with commercial loans that minimum is that 100,000. So, that's where I say, let's be strategic about investments. Maybe we save those smaller loan amounts for putting it in your personal name, right? Just because we can. Or otherwise, you may have to buy in cash, and maybe the property, you could upgrade the property and it'll be worth more, say in 6 months or 12 months. And maybe we can do a cash out refi at that point. So just keep in mind minimum loan amounts there. I mean, I have other lenders that they require them to be higher, but we don't necessarily have to go with those lenders. So what does CoLab have to offer regarding commercial loans, and what is our differentiator? One of the products that I love the most that we offer is that we can do a 30-year fixed option for a loan in an entity name. Most lenders don't offer that. They'll offer either what I've seen is a 5-year fixed amortized over 25 years, or say up to maybe a 15-year or 20-year fixed option. So if you have an investor that really cares about cash flow and they want to be more profitable, let's look at a 30-year fixed option. Maybe it makes more sense for them. Another great option is an adjustable rate. And again, I'm going to go back to what is your overall goal of this investment? Do you think you're going to hold on to the property for a while? Or do you think you'll only be in the property for, say, 5 years or 10 years? Or do you think maybe you're going to be doing some renovations and it'll be worth more? So maybe in 5 years, you'll want to do a cash out refi. Maybe a 5-year ARM does make sense in your situation. Sometimes those ARMs have a slightly better interest rate. So we're always going to take a look at the overall picture. I don't focus just on rate, just because, again, anybody can sell you a rate, but is everyone going to be strategic with you as far as what your goals are as an investor? Other things to keep in mind, there's prepayment penalties for commercial loans. They can vary from lender to lender. So the great thing about being a broker and working with a broker is that we get to shop around for you. If the prepayment penalty is important to you, we can take a look at which lender is going to have a lower prepayment penalty or maybe a lesser amount of time. Some of them offer, a declining prepayment penalty where we say maybe it's a 5-year at 5%, and then on year 4 it goes down to 4%, and so on. And then after that 5-year time period, there's no prepayment penalty. Others do 5% for the entire 5 years. Some do 5% for 3 years. So again, when you're calling and we're talking about what your goal is for this investment property, I'm going to ask that question is what is the long-term plan? What's most important to you? Do you care about the prepayment penalty? Because that can impact you down the road. And the decision you make today, your life may change in a year and you may be doing something with that property. So just keep in mind too, with commercial, every lender is different regarding their risk appetite. Some lenders will say no because they don't like the deal. And even if we get a no from a couple of lenders, it doesn't mean that we're done. We can't do it. That's why I love being a broker, because we have lots and lots of options. We might have a lender too that is looking to grow in a certain market. And so they have an appetite for a certain location because they're trying to grow their market share. Or vice versa. Maybe the lenders had some bad experiences in a certain area and they don't want to focus on that area. So they may say, no, I'm not willing to lend in that location, because of X. So we can always take a look to see, what they want to do. Some lenders are really, really strict on guidelines. Others have a lot more flexibility, and every situation is different. So we can talk through all of those. So I have to touch on credit. I would be doing a disservice to everyone. I know we're talking about investment properties, and many people think, oh, well, you're a real estate investor, you must have excellent credit. That's not necessarily the case. And I find that borrowers only really check their credit scores when they go under contract or when they're looking to get pre-approved. And really, we should be checking our credit scores all the time. There's so many free resources out there that can give us and educate us on what's going on with our credit. And especially with all of the uptick in cybersecurity issues and people getting a hold of your data, I highly recommend that you check your credit. There's you can go on to annualcreditreport.com to get a free copy of your credit report. It won't give you a score, but it will at least give you the line items on your credit report. And so you can check that out and say, I know this line item is not mine. And then you can talk to the credit bureaus and try to get that off. Many times, if we can get that ahead of time, get to it ahead of time before you go on your contract, we can really make an impact on that credit score. The higher the credit score, the better the interest rate. That's just how it goes. That's what the lenders want. They view your credit as your ability to repay. And I know it's a little bit of a game, but it's a game we have to play if we're going to, buy properties. I'd say we really need a minimum score of 650 for investments. And really ideally 700 or more. We just have so many more options once we get to that 700 mark. And really every 20 points that we go up, the rate gets better or the options get better. Certain lenders will have a certain, credit threshold. So again, every lender's a little bit different when it comes to credit score and what they care about. So please do yourself a favor, talk to your friends, talk to your family, make sure that their credit scores are good, because once the credit score goes up, you really have access to a lot more options. All right, well, thanks for joining us. I'm going to answer any questions here that may have joined in, anyone who's dropped questions here in the chat box. Let's see here real quick. So a question is, who are your lenders that you use to close in an LLC? Who are your lenders that you use to close in an LLC? So it's hard for me to say who my lenders are, just because we have hundreds of lenders. There's not just one lender that we work with. And that, again, that's the benefit of being a broker, is that we have so many to choose from. It really depends on the property type. Is it a 1 unit or a 4 unit? Is it a 15 unit? Is it a mixed use property? Are there apartments up top and a commercial space on the bottom? Is it an industrial building? Is it an office building? So we really need to take a look at what is the building type, and then, what is the rent roll, and then being able to parse it down for you as far as which lenders to take it to. I just like to get an overall view of, what does the deal look like, and we can package it up, and then we can send it out to the lender to get a general quote to say, hey, based on this credit score and this cash flow, this will roughly be the terms. Any other questions that I can help answer? Another question, can I buy a property if I have no income? So if you haven't, that's a great question. So thank you for asking that question. Yeah, the answer is you could potentially, if it's in an LLC. If you have no income, it would be very difficult to buy in a personal name. But if you do have an entity set up, we do the commercial loans based off of the cash flow of the property. So as long as the market rent is going to be able to cover, we should be able to do it. We're going to obviously take a look at the credit score. We need to take a look at what is going on as far as, reserves, meaning money in the bank after you close. Because if you don't have any income, that is a risk factor for the lender, but that doesn't necessarily mean it's a done deal and we can't do it. So definitely a great question there. Any other questions? Can I get a gift for down payment? So again, it's going to depend on the property. If you're putting it in a personal name versus a commercial. So in personal name, you're not going to be able to get a gift for an investment property. But for commercial, it's a little bit more like the wild, wild west. There's a lot less regulation, and the commercial lenders basically say, if you're buying a commercial property, they expect you to be able to have the money and to be able to do it. So that's not an issue as far as getting a gift for that. We obviously need to see where it's coming from and how much money is it going to be. But yes, that's a great question. Another question, do closing costs vary if it's purchased in an LLC versus in my name? So great question. Generally, I would say no. It's going to come down to origination fees and underwriting fees and processing fees. So title fees are all pretty much the same as far as, state by state, because they're regulated numbers. and appraisals are going to be generally around the same. But some lenders do have underwriting fees that are a little bit higher on the commercial side than say on the residential side or in your personal name. So definitely we can take a look at, it seems to be always that commercial does cost a little bit more, but again, there are some benefits to buying a commercial entity, just because, like I said, you can buy so many more properties that way, and it doesn't require you to have that income or take a look at that debt. Great question. Do I do a hard inquiry to check my credit? So up front, we do a soft credit pull, just to see what's going on with the credit. It just really, we found that that was better for our borrowers, just to be able to say, hey, what's going on with our credit? Are there things that we need to address? Or are we in a good shape? So do a soft credit pull up front, and then when we go to start the loan, it would be a hard inquiry at that time. The soft credit pull does not show up on your credit report, which is why it's so great. Any other questions? All right. Well, thank you so much for joining me today, talking a little bit about the difference between loans in your personal name and loans in an entity. If you have any questions, please reach out to us here at CoLab Lending. My email, Melissa, MELISSA, @colablending.com. Thanks so much. We'll see you next Wednesday for the next webinar.